Hello and welcome to another episode of Fintech Focus TV with me, Toby Babb. Today, I'm absolutely delighted to be bringing to you Daf Davies from TradeCloud. Daf, how you doing?
Very good, thanks, Toby. How are you?
Very good indeed. Thank you. Very good indeed. So, listen, great to have you on the show. We've been talking about it for a long time, and sorry it's taken so long to finally unveil you to the masses. But for everyone who hasn't heard about the company so far and a little bit about yourself, can you give us a brief précis? Tell us a little bit more about yourself and what you guys are doing at the moment.
Yeah, absolutely. So my background and the background of many of the people who founded the company and work in the company is in physical commodity trading. So I spent time around the globe with Trafigura, which is one of the preeminent physical commodity traders across metals and oil and other energy products. And the founders of the company, after long careers in the physical commodities world, left and had time finally to reflect on their business, right? And while you're working in the business, you tend to just focus on doing what you can do. And you don't tend to take a step back and think, well, what are the challenges? What are the risks? What are the opportunities? And when, after leaving these companies and having that chance to reflect, we started to have a look at, well, how can we start to apply technologies to the opportunities and challenges that there are in the physical commodities space. And that's how TradeCloud was really born. So in 2016, the idea to start building a communications platform for the physical commodities space was born. And here we are now in 2020, and we built a suite of applications in the TradeCloud ecosystem, which enable marketplaces for physical traders in metals and energy products with agriculture around the corner, but also communications tools for the post-trade communications as well, which take all communications in the execution of a physical trade between internal and external stakeholders, such as operations, logistics companies, banks, and so on, and share them to a distributed ledger, leveraging blockchain technology to do it. So we've been live in metals since 2018, and we went live at the beginning of this year in TradeCloud Energy. And we cover around 900 customers across 60 odd countries currently.
It's fascinating, isn't it? Because the tech which you're in couldn't be more relevant at the moment, and it's and doing incredible stuff. And then alongside it, you know, this whole marketplace and building the tribe almost, the community-led aspect of it is really interesting as well. Tell me a little bit about that sort of fusion of great tech and sort of market growth. What's happening there?
Yeah, sure. Well, you know, what's interesting at the moment is that, you know, some of the key themes that are going on out there in the commodities markets in general are right in the crosshairs of technology. So what we've seen, particularly recently, a lot of the pains and challenges in the marketplace in, for example, fraud and compliance, data and security have been accelerated by COVID. And, you know, COVID has kind of shaken out a lot of the pain.
Yeah.
And what we found is that, you know, they're sort of like right in the middle of the kind of benefits that technology can bring to the industry. And the commodities industry is traditionally very slow to change and adopt. You know, we're quite slow to change our thought process. We're quite slow to adopt new technologies. And so there's an awful lot of technology that's out there in other industries that's already proven. But it's a case of convincing our industry to actually, you know, take on board these technologies and harness the benefits. I'd say that, you know, in terms of adoption and getting that platform scale, right, that you've seen in other platforms in other industries, there's probably two main areas that create barriers in the physical commodities world. And the first of it is differentiation, and the second is understanding. The differentiation, what I mean by that is all physical commodities are broadly the same, but different. And they're natural products, you know, so therefore there's always differences, physical or chemical differences out of stuff that you've essentially dug out of the ground or pumped out of the ground. Now, these differences have meaningful impacts on the businesses of the users of the products. So you can't just ignore them. And so if we look to sort of platforms in other asset classes that have benefited from the fact that the underlying asset is homogeneous, we don't have that advantage in the physical commodities world. Many platforms in fintech, the product is the same, it's identical, but we can't ignore that. And so at the beginning of TradeCloud, we spent a long time thinking about this problem. How do you create a platform and scale for the industry when all of the products are differentiated? And we researched a lot of B2B and B2C platforms to take a look. And you do actually find that this problem is being solved elsewhere in industries that are quicker to adopt. A great one to point to would be Airbnb, for example. The underlying asset is a place to sleep, but they differ hugely. Where are they located? How many bedrooms do they have? What are the white goods like in the kitchen? Are all considerations that the user would need to talk about. And that's very similar to the physical commodity space. So I think, in terms of one of those adoption challenges is the differentiation. And the second is quite honestly understanding. I said earlier that, physical commodities players, we like to dig holes in the ground. And it means that, we're usually quite slow to change and upgrade our thinking. And take, for example, blockchain at the moment. A lot of the thinking, a lot of the questions we get from industry participants is, what is blockchain? And we think that's the wrong question. I think the question should be, what does blockchain do for my business? We need to migrate and transition that conversation. When you're buying your phone, you don't spend your time with the salesperson trying to work out how it works. You think about what the outputs are for you. But the big problem there is trusting in the technology. You don't bother asking the salesperson how your phone works because you trust that the technology works. And our industry is not there in terms of trusting that blockchain works. And how do you get to a point of trust? It comes from experience and track record. It comes from actually using it and seeing it work, and to a certain extent, third-party validation. And that's where, and that was very, very important to us in terms of our philosophy. In order to generate that track record and get our customers experience it, we didn't go for a big bang solution. We wanted to start at the beginning, and we wanted to digitize all the things that must happen under any circumstances in a physical commodity life cycle. And start there, start simple, have our customers using the product, and then take them on the journey of upgrading and digitally transforming thereafter. There's a lot of platforms out there that are taking on a specific use case, and they're doing a great job applying technology to that use case. But they're not thinking very much about what happens before and after and how it fits into a straight through process. And that's making it very difficult for companies to decide, well, how do I move forward? How do I pick this one or this one or this one? And it's a big challenge in terms of adopting technology, people choosing how to move forward. And we're trying to convince people here, it's not a big bang solution. You need to actually go on a journey and acknowledge that it's a journey, right? And the important decisions to take now are, what decision will enable my business to transform over time? What decisions will give my business the flexibility in the future to choose different technologies or adapt as technologies adapt? And by starting at the beginning, that initial interaction where the buyer and the seller agree to a contract, and then digitizing the things that definitely need to go on for a successful conclusion is the starting point. And when you have that, you have the infrastructure to start building new and more advanced technologies and basically adopt more and more technology into this very slow moving industry.
Speaking of that, I mean, you mentioned commodities as a slow-moving industry. At the same sort of time, there's been some great breakthrough tech, within it, recently. In terms of key themes within commodities technology that you're seeing at the moment, they're in play right now. Where do you see that? What are you looking at there at the moment?
Yeah, sure. I think you bring up a great point. We've seen some breakthroughs. I think a good one to point to recently is the increase in attention towards electronic documents. These are electronic documents around shipping. What we found with COVID is that with people working from home and not having access to their systems, the need to produce documents quicker and get them around the world quicker has become more important. Previously, you needed to have a document at a ship discharge port before it arrived. With everyone working at home, it's just not physically possible. So people had to migrate to e-documents, and it forced that change. I think the biggest things that are going on right now for me in the physical commodities markets are fraud and compliance and data and security. So we've seen 18 major frauds in the last 2 years, many of them with a financial impact into the billions of dollars. Now, what was interesting was the weak point that was being corrupted, where the fraud was happening, was actually relatively simple. Creating a false document, changing data on a document, fabricating communications. It wasn't rocket science what the fraudsters were doing, but the pain came through because of the really low visibility by stakeholders to what the truth in the business is. Management couldn't see what was true. External auditors and banks couldn't find out, is this document real? Is it valid? And all of this business, particularly in trade finance, again, coming back to that statement, was based on trust. And we've discovered that trust was misplaced. Challenge is like, well, how do we get to that place where we do trust? We're seeing financiers are financing the big trading houses now because they trust them, and they're leaving the middle and small trading houses, you know, without credit lines, without capital. How do we get back to a place where that trust exists? And we believe there's three things at play in order to generate trust: people, process, and technology. And the reason why technology is so important out of those three is companies have been employing and educating people to the best of their ability for a long time now. And companies have been investing resources in optimizing their processes, but they haven't been adopting the technology that they could. So we think this is a huge opportunity to apply these new technologies to a largely untapped market. The commodities market is $9 trillion all counted. And we think that's the largest e-commerce opportunity that's not been tapped so far.
Why hasn't it been tapped so far? I mean, is it because of this sort of general lack of trust in the space, or what is it that I mean? It is always seen as one of the sort of biggest industries in the world, and whenever you look at the sort of largest companies, they're always in commodities, or banking. One of the two when you analyze it. But it does seem to be one of those areas which is untapped. What's the reasoning behind that?
Well, look, I think that, coming back to 2 points I've mentioned, understanding and the differentiated products has made it very difficult for adoption to occur. But also critically, there have been attempts to build platforms in the past, but the underlying technology that was being used is different to what it is now. So many of our customers say, oh, someone tried to build a trading platform before for physical commodities, it didn't work, it won't work now. But a lot of these technologies that are being proven now are new. Blockchain, for example, IoT, cloud, right? They weren't around when these previous attempts were made. And that's the critical difference, right? And it comes down to practically, how is data used in our industry? So when you think about it, you set up a trade between a buyer and a seller of crude, and it's only really the start of the process when you and I agree to do a deal, because physically it has to get from A to B. And all these different third parties have to play their role in order to make that happen. So the practicalities of how data is used is much more complex than in other industries, we feel. So multiple parties share the data, multiple parties update the data. There's a requirement for all of them to be verified. There are intermediaries. Interactions are time sensitive. If the ship arrives before a certain document is there, the whole thing falls apart. And these dependencies between the separate transactions are there. So I feel that that's really the critical difference, is that blockchain brings that capability, to manage data across those complex sets of multiple users in a safe, secure, and efficient way that opens up this opportunity in a way that it wasn't available before.
That PPT thing, people process technology, that you speak about, and the sort of trust that's garnered through that. Break those down individually, because for me, the tech piece, is all about proof of concepts, etc., which we see an awful lot of, isn't it? It's that classic bit of getting through procurement and getting the adoption cases and showing that it actually works, rather than just sort of being able to say it. And I think, there's complexity around that, how that happens, but obviously fairly well trodden path to do it. Talk to me about, I'm in the people business, as you know. Tell me a little bit about how people weaves its way into that as well.
It's an interesting thing, right? I mean, we're in the communications technology space, really. Our competitors are email, WhatsApp, WeChat, things like this. And communications channels have always evolved over time, haven't they? From sort of telex, fax, email, and so on. We've always seen that transition. But the key thing that's different now is that the speed of change is so much quicker, that the technology improves, but people don't have time to get comfortable with it, right? So what we're finding when it comes down to people is that, we have, of course, this sort of challenge to face that everyone is individual and has their own concept of technology adoption. We all joke about our grandmothers and whether they're good at using Facebook or not, right? Well, what's clear is that that transition is going even quicker. My children are going to be using things that I can't even understand by the time that they're teenagers. And that acceleration is so fast. So in terms of people, most of the decision makers right now are people who are technology curious, but they're not early adopters, right? And, they struggle a little bit with that transition. But what we're going to see over the next few years, 50% of the world's workforce right now are millennials. And that's, by 4 or 5 years time, that's going to increase to 75% of the world's workforce are going to be much more adept, the selfie generation, as they call them. And in addition to that, 60 to 70 trillion dollars of capital is going to pass into millennials' hands over the next 10 years. So the decision makers are going to be much more predisposed to adopting new technologies. So coming back to your question, I think there's a lot more behind how people fit into adoption of technology than what I've mentioned. But for me, the tidal wave of change is coming there. And it's easy to underestimate how quickly that the people who are taking the decisions can change the underlying decisions of the company.
And with that, I mean, look, there's a fascinating piece you say there about the sort of millennial wave that's coming through and the force of change. It seems to me that that's having more and more of an impact into business decision making, doesn't it? Because it's not a top-down play as it probably was 10, 20 years ago. It's the generation above that are now listening to the digital advice of the millennial generation, etc., and the generation after that as well. Not to mention, what sort of impact does that have?
Well, look, I think it has a very big impact, and I think it's easy to underestimate. If we take a step outside of the area that we're discussing right now and take a look at what's happening in environmental, social, and governance, in international markets, ESG. Previously, in my entire working history, ESG was always related to corporate social responsibility, nice things to do, demonstrate that you're trying. But what's happening with this generational shift is that ESG is impacting the bottom line. Whether or not you're approaching your business with proper ESG approaches is influencing your pricing power and your market share, because the buyers and the investors actually put a premium on products that have a better ESG credit profile. And so what we've seen in coal, for example, the talk of transitioning away from coal for environmental reasons has been around for decades. But in the last 12 to 18 months, that conversation has really heated up. And lots of people scratching their heads and wondering, why has it got so serious now? And that's the reason, because the decision makers know that this is no longer a nice to have because it makes you look green and makes you look good, but it's a must have because your customer and your investor genuinely puts a premium on it. So I think that, to answer your question, how much of an impact can it have? I think it can be huge. Take a look at what's happening in ESG and how that's impacting decision-making all around the world. And it's not such a different situation with regards to people adopting technologies in businesses.
Yeah, no, absolutely. You mentioned tech there again, and I'm sort of keen to bring this back to TradeCloud specifically, because I know that you're utilizing various different technologies as you've alluded to before. But tell us a little bit about that journey. Tell us about what you're using and why you're using it,
Sure.
and the impact it can have.
Yeah, it's an interesting thing. What I mentioned before, when the founders left their traditional jobs and had time to reflect, it was an important time because we all know that we're so bogged down in doing our work that we don't often take a step back. And the company went through a process of analyzing the options that are out there, doing a lot of research in terms of the technology that's available, a lot of case study analysis of other industries as well. And so selection of the technology was something that really happened up front based upon the principles of what we thought was important from being inside the industry for decades. And we focused really on two areas, the platform itself and the ability to have system interoperability. And I'll come to why that's so important. And the second area we were focused on was security, compliance, and data privacy, because we saw these as the key differentiating factors. Now, in terms of system interoperability in the platform, enterprise blockchains. So blockchain technology has been maturing rapidly. And now it can support the requirements that enterprise have in terms of speed, efficiency, governance, privacy, that it couldn't previously meet those demands. And we went actually with R3 Corda blockchain, because we felt that it actually, in terms of meeting those demands of speed, privacy, efficiency, and governance, it really leads the pack. So Corda differs from other blockchains in that it's very subtle ways, but we felt they were essential to building communities in commodities. So Corda builds distributed ledgers from separate nodes. So for example, the main TradeCloud server is one node on Corda. And if one of our members wants to roll out Corda themselves, they'll have their own node. And other nodes will exist for other cloud-based services that come into our network, such as trade finance, banks, law firms would all have their own nodes. So each of these nodes in the network are approved, so their identity is known to each other. So it's not an open public network where anyone can connect and leave whenever they choose, as many of the public networks are. But at the same time, these nodes, while they know each other, they don't necessarily trust each other completely. So you mitigate for the case that a certain node could be compromised in that case. So the Corda users know the identity of their counterparts and their nodes. But you have this concept of point to point, which means not all information is broadcasted to all nodes, which is what happens in many network systems. And many enterprises have issues with that, all data being shared across all of the nodes. And with R3 Corda, that's not necessary. Transactions can be signed digitally without necessarily showing the full contents of the transaction to everyone. So counterparties can prove that a transaction's happened without actually needing to show everything, without needing to sort of pull it up and show everything under there about the transaction, which is clearly important from a confidentiality point of view. I think the other point I'd like to make around our selection of technology with respect to interoperability, we focused a lot in our early thinking around smart contracts and thinking for the future. How are smart contracts going to be used in our industry, and what do we need to build to enable that later? And we believe that smart contracts are, they work best in environments which have a very strong governance and where the data is already in a reliable, shared and trusted format. So that's what we got busy doing, and that's what we got busy choosing our technology for, getting our customers' data in reliable, shared and trusted digital format. There's lots of uses for smart contracts in physical commodities, freight agreements, commercial contracts, inventory agreements, shipping documents, payment mechanisms. And by focusing early on digitizing that entire flow, as I said, and creating reliable, shared and trusted data, it lowers the barriers for our members to then later do more business through smart contracts. In terms of the last point on technology that we chose, security and compliance. around data is clearly huge. It's huge in all parts of the financial industry, and it is no less in physical commodities. So we are using Microsoft Azure Cloud. So we benefit from their 24/7 security team. And we've never been down since inception. We've never been down apart from planned weekend maintenance, which we're very proud of. And we work closely with PwC, performing audits and regularly doing stress tests on our system to identify any weaknesses that we can upgrade around. And in terms of compliance, we work very hard to make sure that the workflows in our platform support compliance by design. So you're able to configure the routes that users, employees might take to carry out communications in their organization in a manner that is compliant. So rather than just having a policy that writes down how it's done, you can guide them through technology to take the right approach. And in terms of compliance meeting their needs, we've integrated with compliance solutions such as Global Relay that enables them to meet the requirements of their own regulators or authorities. So what we really focused on with our technology is doing everything that we can to make sure that we take our customers to the next level of security and compliance when they join TradeCloud off the boot. And then we can carry on that journey of improving and increasing and evolving over time. I'd like to make the point that we did all of our architecture and built our platform with Volo software development in Armenia. And we recently announced a partnership with other technology platform providers in the commodity space, in Internet of Things, in electronic documents, and in trade finance. And we're starting to join our offerings. We'll continue to do that work with Volo in the future to combine the services of platforms and make them work together so that it lowers the boundaries to our customers joining multiple areas. And if we were to do it all again, we would definitely stay with Volo to do that for sure.
Which is a great testament to it all, isn't it? It's and I find this really fascinating because, you know, as you know, I've been speaking to people all the way through, and you know, we've done a lot as in the commodities space over many years, but there's always been a sort of slight differentiation, despite the fact you probably call it an asset class in its truest sense. When we look at the sort of capital markets tech, particularly around equities and you know, fixed income, it's been different tech, but the fusion now of what's been happening over the last couple of years, and you look at main themes that you've been talking about: security, trust, fraud, compliance, collaboration, particularly around, you know, server and desktop interoperability, system interoperability. These are all words that are becoming universal now across all these different areas to get, you know, to provide genuine value to the consumer and to the customer base. And I think loads of it comes down to that one word, which is swept all the way through this conversation, which is trust, isn't it? Building you know, trust and faith in people that the technology is going to make the world, their world, better from it. And that comes down to this, you know, to something which you started at the beginning of this conversation and comes all the way through, which is blockchain. And the classic piece of blockchain is it still has a very strong link to cryptocurrency when people think about it, isn't it? When you think about blockchain, it is the tech that fuels crypto, which still has a sort of raised eyebrow when people talk about its validity and the trust that it has in that particular space. Yet actually the technology is far more important when you bring it out of the crypto world into other areas about how much value it can bring. In the commodity space, it's probably been less spoken about than it has in the capital market space, which has been very alert to it for a couple of years now. From what you're seeing and what you're thinking, what can blockchain do for the commodity space, and why is it so important?
Yeah, well, I think that's extremely well put, Toby, as like an overview of where we stand, and it's definitely one of the challenges that we face right now, is that from an enterprise management standpoint, we're kind of, the blockchain community is suffering from the fact that a lot of money has been put into projects that have not created tangible results. And coming from a slow moving industry that hasn't yet started to adopt, and having the benefit of hindsight, seeing so many projects fail, you can understand why the commodities industry is slow to move. I think what's really happening now, though, is that many of the blockchain projects that have found real use cases where the application is correct are busy investing in those products right now. And I think 2021 will be quite an important year for that to become visible. Companies like ours and others out there that have been spending the last couple of years working because the use case is justified, the capital was raised, and the work needed to be done. And they weren't focused on externally promoting a vision to try and convince people. Those are going to come to the forefront because they've done the work and they're starting to be applied. And we at TradeCloud, for example, have a live product. And coming back to trust, it's built on track record, isn't it? It's built on experience. So, you know, you need to be out there. You need to have customers using your product in order to generate that track record. And I think there also is going to be a transition that, you know, the trust has always been the theme and always will be. But, you know, why depend on trust when you can actually rely on the facts? And technology allows us to know the truth rather than just trust that we're being told the truth. And that's where it's really going to make the difference. And coming back to your point, so what does blockchain do for commodities? It turns that information into facts that back up whether or not to trust, right? And you're not just left taking a leap of faith to trust people and relying only on track record as the only reason to back people up. I think this is important because coming back to the point in trade finance where the financiers are flying to safety and financing a small number of ginormous traders, and they're having this concentration of risk amongst these, you know, ever-growing traders. And you have to ask the question, is that really a flight to safety? You know, are their processes stronger, right? Are they really incentivized to behave in a more compliant and less fraudulent manner? It's a question mark for me for another discussion. But why rely on trusting people for that when you can apply technologies that will prove it or not? Right. So what does blockchain do for technology, for commodities? We talked about how the data is practically used. This idea of like being able to consolidate multiple parties sharing and updating data, all of them verified as third parties who are allowed to interact with each other, and reducing the barriers to efficiency because of the complexity and the intermediaries in the space. Basically, it brings that single version of the truth shared amongst all counterparts, right? That drives efficiency and transparency for those who need access to the data to have it, driving, you know, significant energy efficiency savings across the space and helping people do what they need to do cheaper, quickly, and more effectively, which is great. Typical benefit from technology. Do what you need to do cheaper and better. But what it comes with is that additional factor of security and trust. Not only are you able to do things more efficiently and effectively, but you're able to do them in a way where you're not relying on just believing someone, but you can see the truth for yourself. If you're financing a physical trade flow, you can see that the documentation is there. You can see that the different counterparties have verified that interaction as true, right? In, for example, a recent fraud case, underlying what happened in this fraud was the trader who was acting fraudulently inside a trading company in Singapore. He just falsified a trade with a major oil producer. He just wrote it up for himself and said, there it is, and presented that document to the financier as evidence. Now, with technology, of course, you can validate that the other side of the deal actually did that deal, right? You know, with technology, you have to have that validation, that acceptance that the deal has really been done, and you've got proof that the other side did it too, and you've immediately circumvented that risk, right? And I think in terms of the third and often overlooked benefit of blockchain, we've looked at efficiency, transparency, security, and trust. But interoperation and collaboration. If you were to sit down and have a conversation, as I'm sure you have many, with the digital transformation people in a commodities company or the CTO, they'll say one of the biggest challenges is interoperation, right? The technology is there and it works, but it's making them work with each other, you know?
Yeah.
And that's a key benefit of blockchain. It makes it easier to connect different services and different networks together in a way that they understand each other. And that's vital, that interoperability, right? Making it easier for systems to work together and removing the barriers to customers to rolling out new systems. Other solutions can easily connect via a blockchain platform, for example, trade finance. And that's why, as I mentioned, we're working extremely closely with partners that offer connected services in our industry, because the silver bullet is interoperability. TradeCloud does what it does, but how well does it interoperate with another platform that gives another service within our supply chain? And that interoperability can only be done properly with the use of blockchain.
Yeah, and that's so important, isn't it? It's you know, we're seeing and hearing more and more from end user clients just that need to be able to adopt you know, new technology and to utilize it into their business has to be that it can be seamlessly used across, and that creates huge opportunities for so many different companies who are coming in there to add value that have traditionally been beaten out of the way by enterprise systems and legacy systems that are just too sticky and too costly to, you know, to move out of the way. But actually there's so much efficiency that can come in from the right suite that can all work together and collaborate and bring in that sort of faith and trust that you talk about. I find it fascinating. I could talk about this for hours and hours and hours, and it's brilliantly put and so clearly put together by what you've just explained. So I'm massively grateful. It's just cleared a load of fog in my head as well. So I enjoyed it a lot, Daf. Listen, there's going to be loads of people who are in a similar sort of situation to me at the moment, who want to find out more, who want to reach out and understand you know, your thoughts on all of this and find out a lot more about a brilliant company that you've been building over the last few years as well. What's the best way of them doing that, and who should be reaching out to you as well?
Yeah, look, I mean, we have a pretty decent social media presence, so you can find us through most of the usual channels. If you look for TradeCloud, our website, www.tradecloud.sg, you can easily get in touch with us. You know, who should be reaching out? That's a great question, because, and it's actually a very difficult question for us to answer, because we are actually connecting all of the stakeholders in the physical commodity trade life cycle. You know, traders, finance departments, legal departments, and then right through to external parties such as insurers, banks, you know, logistics companies, and so on. So it gets a little bit confusing. But what we would say is, you know, for us, we think we're creating benefits for anyone who interacts on the physical commodities supply chain from beginning to end. And our philosophy, as I mentioned before, is to start at the beginning and connect all those services through. So if you are part of the process, you should be talking to us. We often think back to the beginning of booking flights online. You know, when you first started booking flights online, it was a little bit cumbersome. Did it really make sense? So it was a bit easier to go back to go to the travel agent and book there instead. But then over time, when you captured that initial digital interaction, connected services started to come. You can now rent your car, you can take out insurance, you can choose your seat, you've got automated billing, right? Now, all those services as standalone wouldn't have made any sense if you hadn't captured that initial digital interaction, right? So what we would say is, if you are the car rental company for physical commodities, or if you're the insurer for physical commodities, like in that airline booking analogy, then you should be coming to us, because we've captured that initial interaction between buyer and seller, and from that point on, digitizing all of the communications after. So if you touch upon the physical supply chain, then I think there should be a conversation that we have with you.
That sounds fantastic, and I encourage everyone to do exactly the same. Daf, it's been an absolute pleasure hearing it from you. Thanks so much for coming on the show after all this time. I'm sorry it's taken so long to finally unleash you, as I said at the start.
No, not at all. I'm very happy to be on the show, and this time has given me, you know, plenty of time to refine my pitch.
There you go. Well, it's seamless now. I've got no doubt that's what you've been doing all these months and leading up to it. But thanks for joining us. I really enjoyed it. Thanks today.
Thanks very much for the opportunity, Toby. See you again.
Absolute pleasure. We'll do. And thank you all for watching. We'll see you soon in another episode of Fintech Focus TV. Thanks a lot.